Hi everyone, welcome to our webinar on Forensics for Family Law. My name's Karen Lander and I'm a Senior Manager in the Forensics Division here at BDO. I've got Stuart Moore and James Vickers here with me also. Stuart is an Associate Director in our Corporate Finance Division and he will be talking to you about valuations. And James is a Manager in our Digital Forensics Division and he will be talking to you about all things digital. Before we begin proceedings, I'd like to acknowledge that this meeting is being held on the traditional lands of the Noongar people. We pay our respects to them and their cultures and to elders both past and present. So welcome to our webinar. If you've got any questions throughout our presentation, please send them in and we'll try to answer them as we go along. If we're unable to get to your questions, we're happy to get in touch with you afterwards and answer any questions that you might have. So let's get going. So the topics that I'm going to look at is, obviously I'm on the forensic accounting side of things, so I'm going to look at what is forensic accounting, the different services that we can provide, when you should appoint us, and how we can actually help you, which is obviously the most important thing for you. So when looking at forensic accounting, if you want to look specifically at the definition, it's the application of investigative and analytical skills for the purpose of resolving financial issues in a manner that meets standards required by courts of law. So basically, forensic accounting is actually litigation support involving accounting. It's us assisting you with the financial side of things, and if we can hopefully take some of your workload away in relation to this complex financial side, then you can concentrate on all the other legal matters. A lot of people do think that the main area we work in is expert reports, and while we do those, there are a lot of other services that we can do, and trying to assist you to settle the matter for your clients is, you know, something that we look at trying to do. If you can obviously avoid going to trial, your clients are going to be much happier. You'll increase your client base because you'll get a lot more referrals. I myself, just a bit of personal background, spent 7 years being reluctantly dragged through the family court system, so I do know how time consuming and financially draining, emotionally draining it can be. It also means I know a lot of the processes involved, and unfortunately a lot of the family law clerks in the courthouse as well. If we can actually help you not going to a full trial, that's something we'd like to help you with, and that can happen when it's possible. It's great for that to happen. We have suitably qualified staff in our forensics division as well. If you do actually need expert reports in relation to forensic accounting, qualifications in our team includes, we've got all sorts of different things, but certified fraud examiner, certified anti-money laundering qualifications. We've all got our Cert 3s in investigative services, our Cert 4s in government investigations, and we're also all licensed investigators through the WA Police. So we can help and have the qualifications to do so. So one of the first things that I want to look at first is what you're looking for when you're looking through your disclosure documents that have been provided for you. We can actually help you at an early stage as well. Oftentimes we're asked to look through the disclosure documents and help you ask for additional disclosure requests. As lawyers, you're actually also expected to be accountants and decipher the financial accounts, which if they're straightforward, I'm sure it's not a problem. But when there's more complex structures or you've been provided with very little information, it can be quite hard to deal with. I know from experience, you can either be bombarded with information or a lot of information is missing. I have had one where we had a client, we were given one PDF document with 2,000 pages, and that had all sorts of different entities on it. They were all mixed up, out of order. We had financials from 1976 and 1988, which were completely irrelevant to the case. So if you need help extracting all the relevant information, we can actually help you do that too. When looking through the disclosure documents, you also need to be able to identify interrelated entities that haven't been disclosed. I've had a few clients that were completely unaware of other structures that her husband or partner had directorship of or shares in with associates. So when you can actually identify those other interrelated entities, you can actually ask for more disclosure requests, and then they have to provide information in relation to those. We do find when we do uncover the additional entities, sometimes that helps your clients to push for a settlement, because they obviously don't want us to keep digging and finding more entities. They're a lot more keen to settle sometimes. And one of the main things to look for is loans to associates or interrelated entities. I come across it so often where your client all of a sudden owes the family company or trust a vast sum of money, and prior to separation, that wasn't the case. So you'll probably hear me say this a couple of times, but one of the main things I do usually ask for when we're asking for disclosure documents is actually the general ledgers. When you ask for those, it actually shows how the loan balances came about, and because of the miraculous change from before separation to after separation, and usually in one party's favour, and usually that's not your client's favour, the general ledger actually shows where the transaction started, when it was input, but it also then shows the journals to shuffle the money around and where they ended up at the end of the day. But from experience, when you do ask for the general ledgers, it's really not something they like to give to you. They're not quite willing to hand it over. The other thing you need to consider when you're looking through your discovery is also the ownership of the different entities in the group structures. I do have a lot of clients who tell me that they own 50% of certain entities, and it's usually a small family company, and they're under the illusion that they actually are a 50% shareholder, and quite often they're not. Their partner may actually be the sole director or shareholder, or if they're a director as well, their spouse might actually hold 100% of the shareholding. So you really need to look at that when you're going through your disclosure as to who actually owns the entities. With trustee companies in relation to trust, you also need to be aware of those and their ownership. If one partner is actually the sole director and shareholder of the trustee company, they actually have the power to distribute the monies to the beneficiaries of that trust. And if your client is actually receiving monies directly from a trust post-separation, and the accounts haven't yet been prepared, if the trustee, who is the other party, because they're the sole director and shareholder, decides not to distribute those monies to your client for that financial year, your client's going to end up with all of those monies being owed back to the trust. So in order to safeguard your clients from owing monies to the entities, you really need to actually be looking at who the directors and the shareholders of the trustee companies are as well. Now we're going to look at special purpose financial statements. So when you're looking at a financial report, you don't have to look at it cover to cover to understand the key information, but it's also very easy to hide the financial performance of a business, especially if you're looking at unaudited standalone special purpose financial reports. And how do you actually know if that's what you're looking at? So some of the questions you actually have to ask yourself when you're looking at financial statements are they prepared in accordance with accounting standards? Do they show the whole picture? So do they show the whole group and interrelated entities? Are they audited, and are they up to date? So what type of company it is what's going to determine the reporting requirements for those type of companies. So I'm just going to talk briefly about large and small proprietary companies. You don't have to worry about public companies, obviously, because they lodge their financial reports publicly, they're easily accessible, and they have public share registries. So I will go into the definition of a large proprietary company. So this is a bit boring, but we need to go through this. So as at the 1st of July 2019, a proprietary company is classified as large if it satisfies at least two of the following criteria, and that is the consolidated revenue for the company and any entities that it controls is $50 million or more. the value of the consolidated gross assets and the entities it controls is $25 million or more, and the company and any entities it controls has 100 or more employees at the end of the financial year. Interesting to note, that's just from this current financial year onwards, the 2020 year onwards. Previous to that, the thresholds were half of that. So there were 25 million in revenue, 12.5 million in gross assets, and 50 or more employees, which you might need to know if you're going back several years. So if you're not classified as a large proprietary company, you are a small proprietary company, and that's where we end up getting special purpose financial statements. So every company, whether large or small proprietary, has to keep financial records, and you have to be able to explain your financial position and performance of the company, and you need to be able, the records need to be able to be used to prepare financial statements which would show a true and fair position of the company. And they must be kept for 7 years, the records. Interesting to note as well, because I do get this a lot, where one party is a director but they don't have any access to the financial records. Under the Corporations Act, under Section 290, they actually have the right of access to the financial records. All directors do. So if they're not being provided with those, you can always quote the Corporations Act in writing and have those provided to you. So if you're a large proprietary company, that's when you actually have, Section 292 of the Corporations Act actually applies to you. And what that means is that you must prepare and lodge a financial report and a director's report, and those with ASIC, and they have to be audited unless ASIC actually grants you relief for them not to be audited. They're lodged within 4 months of the end of the financial year, and they're sent to all members of the company. And Part 2M.3 of the Corporations Act has all the different requirements for those, so I'm not going to go through those. So if it's a large proprietary company, you can be rest assured that they're current, they've been prepared, and most importantly, if they have been audited, they should be reliable, because the auditor needs to actually sign off that they're complying with accounting standards and that they represent a true and fair view of the company's financial position. So if we're not a large proprietary company, that's when we're going to come across special purpose financial reports. Small proprietaries don't have to prepare financials. They have to have the records available if they were needed to, but they don't actually have to prepare reports. So a lot of the reports that they prepare are special purpose and tailored to how they want them to be prepared. There are 2 instances where they can be directed to actually prepare it, and that is under shareholder direction or ASIC direction. If you've actually got 5% of the votes in a small proprietary, you can give the company a direction to prepare financial reports and send them to all shareholders. So if you are actually in a family law dispute and you're a 50%, a lot of the time it's a mum and dad company, they each have a share each, so they're 50% shareholders. If you're within that time limit at the end of the year, so it's no later than 12 months after the end of the financial year, if they're refusing to provide you with financials under this section of the Act, you can actually direct them to prepare financials and provide them to you. So when you're actually looking at a small proprietary company and the reports that they've given you, how do you actually know if they're complying with accounting standards? You actually need to know what you're looking at. A lot of the time they will be prepared with a family law dispute in mind, if that's the situation they're both in. You also need to consider the date of the financial statements. So if you're dealing with a separation in 2020 and the financial statements provided are for 2018, they're not current. A lot can happen in 2 years. A lot of journal entries can be entered in 2 years, and a lot of money shifting can occur after the fact. So you should be asking for the most up-to-date financial statements if you can. If they're not prepared for the current year, so if you have, say now, for the if you're separating now and you want them for the 2020 year, they may well not be prepared yet. So what you can actually ask for is a detailed general ledger from their accounting software. A lot of the time they use Xero or Maya, but the most common accounting software, and you can actually ask for a report from those, just so then you can see the transactions for the current year. I do find that you do get a lot of pushback when you ask for the general ledger reports, because that's actually showing the transactions as they happen and where they were initially recorded, and then you can see where they ended up in the journals that were entered into the financials to alter them. So they really don't actually like showing you that most of the time. So with special purpose reports, what do you have to be aware of? Whoops, I've skipped a slide, sorry. Okay, so what we need to look at in the special purpose reports, and what you're looking out for, is inflation of assets or increasing of profits. The way that that can happen, they can capitalize repairs, so they can actually put the repairs as an asset rather than as an expense. And then obviously your profits are going to increase from that. Dividends as loans, they obviously have to think of their Division 7A provisions as well, and they can also bring sales forward to show an increase in profits. Most of the time I come across people trying to decrease profits though, not increase them, and the way that they can do that is the exact opposite. They can actually expense capital expenditure, so buying an asset, they can actually pop that in as repairs and maintenance or as an expense rather than putting it in as an asset in the balance sheet. They can over-recognise liabilities and provisions, so bad and doubtful debts. They can look at, increase their provisions too much and then reduce their profits. One main thing that you need to be looking for when you're looking at these is the related party transactions. So related suppliers, landlords, financiers, because they can inflate their costs for rent, for interest paid, and then they're decreasing their profits. A lot of the time, the ones that I like and are my favourite are the management fees and consultant fees. You really need to look at those. A lot of money can get hidden in those two expense accounts. Also looking at the financials, one main area you need to look at is looking at the profit and loss as well as the balance sheet at the same time. So they can put in an accrual and not actually pay an expense. So I've come across a deduction in financials for $80,000 for legal expenses. These weren't actually legal expenses. They were actually owing to a mate who actually wasn't a lawyer. So it actually wasn't a legitimate deduction, but it was shown in the balance sheet as a creditor. So it actually wasn't paid. So it was just showing as owing, but it still reduces the profit in the company by $80,000. And because it's not audited, if you're not looking closely, it might not be picked up. So they're the types of things, the non-arm's length transactions and non-business related expenses you really need to have a look at, because the financials not being audited, there's a lot of interesting items that can be hidden in there when they want to show that the business isn't as successful as it really is. And usually, obviously, that's for child support purposes or for settlement purposes. Again, one other thing to take into account, which I've already spoken about, is the movement in your loan accounts. So again, the general ledger is going to show you how that balance came about. They do change a lot pre and post separation, I've noticed. So if you're getting those general ledgers, you can see the transactions that are actually being put through. Asset and liability schedules. I know a lot of you actually prepare them yourselves for your clients with your Form 13s. We can actually help you with those if they're a bit messy or if they're very large. We've actually had one where you're not always looking for irregular or dodgy assets or transactions. Sometimes your client just wants peace of mind knowing that all the assets have been taken into account. And I think we've had one with a very large asset pool of over 100 million, and that party just wanted to make sure that everything was being taken into account for settlement. Again, who's name is the actual asset in is something that you need to look at. The only problem we sometimes come across is when there's international assets or international entity ownership. I've had ones where money's transferred into the Cayman Island bank accounts, or companies are actually established overseas. One was in the Cayman Islands, and they actually require a court order to be provided to show ownership of the companies or who the directors are. In Australia, they're readily available through ASIC, but unfortunately in other countries they're not. So we can do it, it's just a cost-benefit analysis you have to go through, because you do have to pay for searches in other countries and court orders if you want to go that far. Now I'm talking too long, so I will speed it up a bit. So I'm just going to look at some of the investigations that we can look at. One thing that we do get asked a lot about is the appropriateness of spending, and that's pre or post separation. And we've done some detailed reports to assist in cross-examinations for that. We've had ones where a client had a large settlement that came in pre-separation, and it was for the sale of a business, and then a few years later the money's all gone and they're not sure where it's gone. So we can actually help trace that through the bank accounts and find out where it ended up. I also had a client who wasn't aware that the other party had opened up 15 personal bank accounts in their own name, and they've been siphoning all of the marital joint monies into those accounts over the past few years. I'm not sure why you wouldn't just open 1 or 2 personal accounts. For some reason they had 15. So we can actually show now, just when you're looking at this slide, so the expenses aren't going to add up to the totals because I've hidden a lot of the rows. This is a pivot table that we can usually do off the bank statements when we're provided. We can break them up into all different categories, whatever you need in cross-examination or whatever is a bone of contention in your court case, we can actually break it down to assist you. So it's mainly to help the lawyers. I know that someone has said their client was a lot more confident on the stand, knowing exactly where everything went. So I guess it can help you in that respect too. Then if there's a certain category that people are interested in, and usually it's the new girlfriend's diamond ring from Tiffany's, we can actually break that down and do just the Excel spreadsheet analysis from the individual bank account. So you can see where it came from, that individual's bank account, but then you can also see on the next screen all of the jewelry and all of the different bank accounts and credit cards it came from. So just entering those in can sometimes help as well. And I think that's going to just about wrap me up. And I'm going to hand you over to Stuart, who's now going to talk to you about valuations.
Hi everybody, my name's Stuart Moore. I'm an Associate Director in the Corporate Finance team at BDO. My bread and butter area is business valuations, and that takes me to a lot of different areas: takeovers, acquisitions, succession planning, valuations for tax, valuations for transfers of interest in businesses, and family law valuations, and hence my involvement here today. So it's obviously quite a complex, broad-ranging area. So I'm just going to kind of skate across a few elements that I think will be of interest to people involved with family law, and hopefully you'll find something that makes sense to you from what I've got to say. Just having trouble moving the slide. Okay, so in terms of the context for family law valuations, the valuer is normally involved as a jointly appointed independent expert, as an expert witness, and that's most commonly how we get appointed. Both parties' lawyers are involved in the decision. The other way in which we're sometimes involved is as an advocate. So that's more a kind of one-sided sort of valuation. And obviously that gives rise to the possibility of critiquing another expert's report, which is also something that valuers can do. I suppose one of the things that's worth just touching on is the sort of qualities that you probably want to be looking for when appointing a valuer. Expertise is quite important, and one of the ways in which that is demonstrated is chartered accountants have a business valuation specialist qualification. So if your proposed valuer has that, then that is obviously a good sign that they've got the expertise that chartered accountants value. The other sort of major area that is important is experience. And one of the good things about valuations, and one of the sort of difficult things about them, is that it's often more of an art than a science, and a lot of professional judgment is involved. And so what the valuer really should have, or the valuer's firm or company should have, is a good range of experience across lots of different sizes of businesses, lots of different corporate structures, and lots of different ways of getting involved in the valuation. And that way you'll get a lot more of that experience to bring to that professional judgment. And then I guess the third element that's quite important is the quality control. And there's a standard for valuation services, APS 225, which you would expect your valuer to follow. It doesn't provide a lot of guidance, but it does say some of the things that should be in a valuation report. And then there are the international valuation standards, which are a lot more prescriptive and really do show you how certain things can be undertaken in a lot more detail. So they're very useful to make sure that they're adhered to. In terms of the valuation approach, I think the most important thing is to understand the business. And as accountants, the first thing that we go to is the financials. And we can learn a lot from the financials. And obviously, it's better if someone like Karen's been through them and sorted out all the rubbish that's going on. But either way, we tend to look at the financials, and then we want to talk to the owners and managers and see how the business works. And then best practice is really to do a site visit, particularly if it's something like a retailer or a manufacturer. And also, it's really important to look at the ownership structure, because as Karen's been saying, there's often complex ownership structures because of organic growth or trying to hide things or whatever. Need to understand where that sits, and also get real clarity on what is the interest that's being valued. Is it the whole company? Is it somebody's particular shares? Is it somebody's units in that entity? There are several bases of valuation, which is really sort of the definition of what it is we're trying to value. And this one that I've put up on the screen is quite a useful one. Market value is very commonly used, and this is drawn directly from the International Valuation Standards. As you can see, if you read through it, there's quite a bit of sort of hypothetical stuff there. So this is kind of an ideal, a standard to aspire to, but it gives you a guide of what we're trying to achieve when we talk about coming to the market value of a business. Okay, so there are a number of methodologies for doing a valuation. I think the essential rationale is probably the same for all of them, and that is that what you're after is the current value of future net cash flows in and out of that business. And essentially that can be either from the earnings of the business, if it's a profitable business, or it can be selling off the assets and liabilities if the business isn't profitable. And obviously there are various methodologies of arriving at particularly the former. In terms of methodologies, we've got earnings-based methodologies, assets-based methodologies, and other. And I'll just run through those in a little bit more detail in the next couple of slides. Okay, so earnings-based valuation is made up of two basic components. That is the earnings of the business, which is estimated future maintainable earnings and is generally based on past performance, mainly because often for the sort of businesses that we get involved with family law, that there aren't projections and forecasts available that are sufficiently reliable. So we look at past performance and we have to normalize that past performance, which means taking out anything which isn't still part of the business. So for example, if the business has acquired a new outlet in the last year, we'd want to go back to prior years and assess what adjustment we should make to earnings to reflect the fact that there should have been another outlet for those other years. So all the time, what we're trying to get back to is what the business currently can do in terms of earnings. And the other side of the equation is the multiples. So that's really what we multiply the earnings by to come up with the overall enterprise value of the business. And the most common way of doing that is to look at observed market multiples. So that's whatever is available in the public space. So it may be that we have to go to publicly listed companies. It may be that there's information on private companies, whatever can be made available. And then we have to adjust those publicly available pieces of information to arrive at a multiple for our particular business. So things like size, things like it being a private business compared with public, and factors specific to the business, such as particular reliance on the owner and so forth. And that will adjust the multiple that we derive from the publicly available information. On the other side, the asset-based valuation, and I think a more straightforward concept. So it's the value of the assets less liabilities. So generally where the business is not profitable. And it's assessed on a going concern basis. So it's not a liquidation basis. It's not kind of selling off at any price. It's sort of selling off in the normal course of business. So you don't kind of settle for just what you can get rid of it for. It's what it's really worth. And if in this situation you've got a business with a lot of equipment, for example, so you might have a mining services provider that rents out mining equipment, they would have a lot of equipment. In that case, for evaluation, we would engage a specialist equipment valuer to look at that equipment. So the other valuation methodologies, basically the discounted cash flow. I mean, this is really the Rolls-Royce of your valuation methodologies, because this allows you to vary all the inputs to the equation, as it were. Unfortunately for your small to medium-sized businesses, it's very rare that future cash flow projections of sufficient quality are available to be able to use this methodology. But it is the best because it's the most precise, but it does take a lot of work. And then other approaches that can be adopted, a multiple of revenue. So a multiple of revenue is similar to a multiple of earnings, but instead of looking at after costs, we sort of assume that costs are relatively stable between different businesses, and we just look at the value based on the multiple of revenue. And then in terms of a cross-check, we sometimes look at rules of thumb. So particular industries sometimes have rules of thumb for valuing that business that would never be relied on by the valuer, but it's often useful to just look at what people in the industry consider values based on. Okay, so the valuations that I've talked about so far, are basically getting to the enterprise value. So your earnings-based valuations, DCF valuations, come up with the enterprise value of the business. And generally, when we're looking at family law, we're more interested in the equity value to the individual. So we need to make adjustments. We need to take out the debt component. We need to add in cash because that's the way the multiples work. And we need to also consider non-business assets and liabilities. So for example, the company could own the premises where the business operates from. That would be a non-business asset that we would have to make sure we take into account. And then at the bottom there, the net asset valuation is already an equity value. So I guess in pretty simple terms, that allows us to come to the equity value. And then the next stage is to look at what sort of interest we've got. So the equity value to this point is a control value. It's the value of the whole of the company or the entity or the trust. And we have to consider a couple of discounts because of the minority interest component. So if you've only got 20% or something, you have to consider what that does to your value. So you basically start with a prorated minority interest, and then you consider a discount for lack of control. So that's the inability to control the decisions of the business. And then you have a discount for lack of marketability, which is the inability to actually market your shares or your units. And then just a few sort of issues to be aware of with valuations of this nature, and I think Karen's kind of covered some of these sort of things already, but in valuations, you do come across non-arm's length income and expenditure. So it may be that there's revenue from doing business for a related party, and it wouldn't necessarily be at market rates, and we'd want to adjust for that. And there's also non-business related income and expenditure. So a lot of small companies, they'll do other things within their business accounts, and really when we're doing the valuation, we're more interested in the actual essential business enterprise. As we referred to previously, unaudited accounts are less reliable. And then obviously we get the interesting accounting treatments from time to time. So whether that's for tax purposes to some dodge here and there, or whether it is to disguise how successful the business is. And we do come across that quite often, but it's just something to be aware of, that the numbers can tell you lies, I guess. And then just a couple of quick case studies for valuations that we've done. So this one was a group of family medical centres, profitable business. So we used capitalisation of future maintainable earnings. The multiple was derived from listed healthcare companies and then discounted to reflect this particular small family business. And this particular one also involved a retrospective valuation. So I think we did another valuation as at 2011, along with the current valuation. And example 2 is when we looked at a family business, which was basically a diverse group of investment companies all over the world, limited information, lots of intercompany balances, very difficult to determine control for some of these companies. And what we were looking at was the underlying investment. And we had to take into account, obviously, the level of interest and control of the parties. So that was quite a challenging one. And I guess they're just a couple of little examples just to give you a bit of flavour of the sort of things that we do with valuations. So as I said at the beginning, this was really just skating over the surface, highlighting a few bits and pieces. Very happy to answer any questions in the next days and weeks, whatever comes up. But for now, I'm going to hand over to my colleague, James.
Hello, everyone. As Stuart said, my name is James Vickers, and I'm the Forensic Technology Manager here at BDO Perth. I've been with BDO since February 2020. Prior to that, I had a relatively short stint as an IT manager with a local IT company. But prior to that, I was actually a police officer for 15 years in both Ireland and Australia, with the last 7.5 of those years being with the Western Australia Police Technology Crime Services. And for the last 3 years, I was actually a sergeant in that unit as well. By way of qualifications, I have a Master of Science in Forensic Computing and Cybercrime Investigation. I also have a graduate certificate in Digital Forensics, and I am a certified computer examiner. The reason why I list them is that I will actually be speaking about qualifications and expert evidence later on. So I'm going to go straight into it. I'm going to talk about digital forensics and forensic technology kind of as an overall, just for you to consider what may be achievable by examining electronic sources of evidence. Okay, so digital forensics and forensic technology, they're terms that are used interchangeably, along with other terms such as computer forensics and electronic evidence as well. But I'll just focus on digital forensics and forensic technology. Digital forensics is a branch of forensic science encompassing the recovery and investigation of material found in digital devices. And forensic technology is the service that consists of specialist tools, software, and expertise to undertake digital forensics processes to recover digital evidence. So basically, digital forensics is the science and forensic technology is the service. So there's multiple sources of digital evidence, which I'm just going to go through very quickly. I might make a few points on one or two. So we can acquire data from computers and servers. We can also acquire data from mobile devices such as mobile phones and tablets. An iPad, for example, would be considered a tablet device. An iPhone is a mobile phone. There's thousands, if not tens of thousands, of different makes and models of phones and tablets out there, and we have support for the majority of those models. The reason why you might want to consider extracting data from a phone specifically is that these days, your whole life is on your phone, so there's definitely a lot of evidence that can be retrieved from a mobile device. Probably not specific to family law necessarily, but you can get evidence from GPS devices, GPS navigation devices, whether it be from the device themselves or any attached storage that's in there. Optical media such as CDs and DVDs. These were, up until a few years ago, probably the primary method of sharing electronic data between individuals. However, that's now been surpassed by external USB thumb drives and hard disk drives because they are so much more cheaper than what they were years ago, which is probably the most common way of sharing information with, if you don't include email. Cameras and flash cards. Both of these devices can store information, and they can also be used as glorified USB devices as well. Especially the flash cards or memory cards, they can be inserted into computers and used the very same way as a USB thumb drive. So whilst it probably would be unusual to actually come across that in a family law scenario, there might be that time where it does need to be examined and it can be safely done. Email is another good source of evidence, specifically from email accounts. So we can, if there is an email client installed on the device, we can interrogate the device and extract any emails that are saved within that client or associated to that client. When I say the term client, what I mean by that is the software that's installed to deal with the emails. And then, but you can also have webmail or your business email might be through Office 365. They can all be safely acquired as well and then subsequently examined and used as evidence. Social media and other web sources. digital evidence can be retrieved from these sources as well. There are statutory limitations on certain things that you can and can't do, especially with regards to social media if you're logged into an account, but it's outside the scope of this, so I'm not going to elaborate on it. Gaming consoles can also store information as well. So they can store pictures, they can store files, and they can be used as rudimentary storage devices. I'm not saying go out of your way to submit a gaming console to us, but just be mindful that they can store data as well. Multifunctional devices such as printers, scanners, faxes, etc. These devices typically have some sort of limited storage on them, mainly for the purpose of saving a print job if the device is out of paper, but they also have the potential to store information as well. Network devices such as firewalls, if we need to track the flow of information, should ever be required, that can be done so also if we do have the relevant information or the relevant scope. And lastly, but definitely not least, the cloud, which I'll talk about in a moment. So why use forensic technology services? The quantity and complexity of data can be very challenging. You could probably manage 1 or 2 devices on your own, and you could probably safely go through it. But as soon as you start adding multiples of devices, something as small as a 4 GB USB thumb drive can potentially have hundreds of thousands of documents on it. Worst case scenario, becomes very overwhelming very quickly. There's risks associated with such quantity and complexity as well. One of the main ones is overlooking of evidence. Human fatigue definitely sets in when you're looking at troves upon troves of information, and human nature unfortunately kicks in and the person starts taking liberties, cutting corners. I've seen it happen before. It's definitely a big risk. The 2 next items are probably the biggest risks in my personal opinion. Misinterpretation of the evidence is a big risk in my opinion. If you misinterpret the evidence, there could be consequences as to a person who's subject to litigation. It could be subject to court action, disciplinary action, potentially even criminal charges or loss of employment. So it is critical that the evidence is interpreted correctly. And last but not least, loss of evidence is if you don't have the data, you don't have anything to examine, hence you don't have any evidence. The most critical stage in the whole of the digital forensics practice is to actually preserve the data. Any actions that you take or any lack of action, depending on the scenario, can affect the accuracy and admissibility of evidence that's gathered. And for these reasons, it's recommended that you seek advice from a qualified practitioner in the first instance, so that guidance can be given to you as to what steps need to be taken and whether you need further professional assistance as soon as possible. So, luckily, forensic technology services can fully manage the overhead of digital evidence handling for you. There's some key stages of digital forensics best practice. There are more than 4, but I'm just going to elaborate on the 4 because I incorporate a few purely into the preservation. So we've got preservation, which is preserving the evidence. That would also incorporates identifying potential sources of evidence and collecting that evidence, but then we need to preserve it as well. Then we need to conduct analysis. Essentially, we need to analyze the data and try and make sense of it and ascertain what happened. Then we need to report on the data or on the evidence. There's no point in doing analysis unless you're going to report findings. And lastly, we need to present the evidence. I could create any type of report and put all types of technical jargon into the report. It's going to make no sense to you. It's also going to be presented in a way that is understandable. And that may ultimately end up in court as well, hence why I've got the term testify in there as well. So, once potential sources of data have been identified, steps must be taken to actually preserve the evidence. So how can we actually achieve this? The main way that we do it with regards to computers and servers is by a process called forensic imaging. A forensic image is a bit-for-bit copy of the storage device. There's all all sorts of other technical factors that come into a forensic image, which I won't elaborate on, but essentially it's a reputable method for being able to take copies of computers and other data storage devices. Next, we can conduct a forensic download or forensic extraction of all available data from mobile devices. It's not the same as an image, typically because the mobile device usually has to be on to be able to examine it. So it's not a true forensic image. However, the extraction is no less forensic. There's also multiple components in mobile devices that a lot of people overlook that may have evidence on them, such as memory cards or SIM cards. And some phones have the capability to store 2 SIM cards, 4 SIM cards, if people are roaming between countries. The same for memory cards as well. They can have, typically, they just have pictures, videos, and verbose application files on them, but they can also have information hidden within them as well, depending on the type of device. Lastly, we can acquire online evidence from online and cloud resources, such as Office 365 email. Most businesses that I've encountered in my role here use some version of Office 365. Their emails typically are not within their premises anymore. They're actually hosted by Microsoft. Then we also, if we're talking about a personal scenario, we have webmails such as Gmail, Hotmail, Yahoo, whatever webmail provider you can think of. These typically are accessed through a web browser, so you don't have ready access to the data, but there are methods that we can safely acquire the contents of a person's email address. Dropbox, which is it's free and commercial. There's a paid for service as well, but you can share information with people online by dropping it into Dropbox. That information can be safely acquired also. And if you're an Apple user, more than likely you've got an iCloud account as well. So as you can see, the cloud is actually the present. It's not the future anymore. It actually is the present. Most people who use any type of computing device more than likely have access to cloud resource at some stage. Some tips that or some warnings I should point out. I highly recommend that you do not forward emails or text messages. It compromises the integrity of the communication, and it will change or overwrite any timestamps that may be relied upon. From my experience in the court setting, one of the most common questions I am asked about is about timestamps. And that will change if you forward an email or unforward a text message. Do not connect mobile or loose devices to computers. You will change modify times, access times that potentially make a device corrupt. An example being, if you connect an iPhone to any computer that has iTunes installed, it is very, very easy to wipe that iPhone with just a few clicks. And lastly, but definitely not least, please don't turn on and browse any computers or devices for reasons I've already stated. You will change the integrity of the evidence, especially if it's a shared computer. And timestamps, metadata, system logs, and all other types of records will change as soon as you turn on that device and start browsing it. So I'm going to give you a scenario as to what happens when something goes wrong. So there was a mobile phone used in the commission of an offence. Most people probably recognize that type of phone from 15 years ago, maybe. I'm sure everybody has probably owned that at some stage. There's a message of interest critical to the investigation on the phone, which I've highlighted here. The phone was off for a prolonged period of time. So from the time it was first seized to the time it was actually presented in court, a significant amount of months passed by. However, when it came time to present the message as evidence in court, the investigator turned the device on in court. What happened next? This is what happened. So typically, especially on older phones, anytime the message storage was at capacity, the default behavior was for any new incoming messages to overwrite the oldest message that was present on the device. As we can see from this screen here, it looks like that the oldest message here is the 20th of June 2009. However, when he turned on the phone, and it was a pay phone as well, he got an incoming service provider message. I'm using Vodafone as the example, and it essentially said, hello, to keep your account active, please kindly log in today, add credit, etc., etc. You'll notice that the date on that message is the 17th of August 2010. So it has overwritten the oldest message on that device, which just happened to be, in this case, the evidence that was being presented in court and was actually wiped in front of the courtroom setting. So that's something we want to avoid, and it's something that I can help you avoid. So next we need to analyze the data, and I'm not going to go through all of these. I'll leave them up on the screen for a minute so that you can read them. This list is also not exhaustive. As you can see, there are multiple types of data, multiple sources of data. We can look at documents, we can look at pictures, we can look at videos, but we can also try and decipher user behavior, identify connected devices to computers, and so on. May be asked to do something as simple as look at internet search history or internet search behavior compared to an extensive user activity timeline where we need to put someone beyond a reasonable doubt behind the keyboard. And all of that can be done. Just the simpler the job, typically the shorter it takes, and the more complex the job, it does typically take a long time. So I want to give you an example of what you can of an analysis and what you can see from. This is just an example of an email, and all you will typically see is who the email was from, what the subject line is, and who it was sent to, along with the time that the message was received, and the message body itself, which in this case says you are not getting anything. However, the following is what I can see when I use the tools that are available to me. And I'll start from the left-hand side and work my way down. So the message ID is just a unique identifier, and I can use this to, whilst reviewing other emails, to determine if that email is an original or if it has been forwarded on or replied to. Next box that I highlight is the date timestamp assigned by the email software. You'll notice if you look at the small text that it says 11:28 plus 10, which is Eastern Standard Time. I've converted that back to Australian Western Standard Time, which is 9:28 a.m. That's another thing that often gets lost in digital forensics as well. There's a proliferation of time zones and they need to be consolidated, especially if you're working across borders. The next section is just a list of devices and servers that the email was transmitted to before it got to its destination. It's not something that typically you would go into in too much detail, but if there was an allegation that I never received the email, this is something that you could inspect to see if there actually was any issue. Because typically an email should be delivered within a few seconds, but if it's within a few minutes or a few hours, there potentially is a problem, and that can be investigated. On the right-hand side, I'll just give an example where a timestamp is in one of those received logs as well. And lastly, we can actually potentially determine what software or what application created that email. In this particular example, it says iPhone Mail 8F190, and if you go away and do some Googling, do some research, you'll figure out that that actually refers to Apple iOS version 4.3, and that was an older Apple operating system used on iPhone 3s and 4s back in 2010. Okay, we're nearly there. We next need to report on the evidence. We need to communicate the results. Yes, they can be done verbally, but ideally you're going to want some sort of paper or some sort of context around what was found. A report can be brief, interim, or full, depends on what stage of the investigation or of the court process we are at. We need to also outline the significant data recovered, and we also need to outline what we didn't recover if we were asked to recover something and we weren't able to do so, and the context around it. Digital evidence can be complex and difficult to understand. Also, any representations that are made in the report should be accurate. Typically, opinions should be avoided. It should be based on fact. And if any edits or enhancements are made, they should be clearly identified and the actual original evidence made available also. We don't want to make it look like that we're fabricating evidence, but we also want to aid the reader and aid the court to actually be able to understand the evidence, which means that sometimes we do have to be creative, but we need to have that full transparency that nothing untoward has happened. And conclusions need to be clearly articulated and how they came to be. Language used in a report should be in a language that any person can understand. It shouldn't just be for the benefit of a technical audience, which I have seen as a caveat in many reports, and in my personal opinion is a cop-out. And also any technical jargon should be, if it does absolutely need to be used, should be explained in the simplest of terms. So lastly, we need to present the evidence. The three previous stages all result in the last stage, where the ultimate end game is that it's actually suitable for use in court. And in the majority of cases, testifying on digital evidence will require expert input and opinion. So for digital evidence to be presented in court by a witness, typically the witness has to be accepted as an expert, and as per, this is a Western Australia example, but as per, I believe it is Section 79 of the Evidence Act of 1906, for a person to qualify as an expert witness, they need to, the practitioner needs to be qualified and experienced. Training undertaken by the practitioner needs to be relevant, so I just can't go in with any IT degree or any IT certification. Ideally, I need some sort of digital forensic specialization as well. And the evidence must be given in a format that can be understood by the court. Again, I'm not going to provide a technical report. I'm actually going to explain what was found, the reason why it's there, should that be what's required for the case. The evidence must be collected in accordance with the rules of court. In other words, it must be collected forensically. If we were to ask an IT technician to go away, collect evidence in accordance with the rules of court, they probably wouldn't know what we're talking about. The actual capture of the evidence in most cases is actually pretty simple. It's all of the processes, the paperwork, the continuity of evidence, chain of custody, that is what actually sometimes gets scrutinized, and that's something that we can definitely help you with. Some final points before we move on and we wrap up. If you do happen to commit to a possession of a device on behalf of your client, please obtain the PIN or the password as soon as you come into possession of that device. Very, very often, people neglect to ask for this, and if months pass and we need to get into the device, that opportunity may be gone, as the person more than likely has forgotten it. I've seen it happen many times. If they state that they use their fingerprint or face ID or whatever, there will typically be a backup PIN or a password, because that technology is not perfect. There has to be a second way into the device. So make sure you insist for the PIN or the password. Please minimize your interaction with the computers and devices as much as possible for reasons I've already explained. And as a general rule, if data is deleted, please consider it gone. But there are some exceptions, which and I could go through multiple hypothetical scenarios. You'll be here till next week listening to me. But I am more than happy to take a phone call from you or an email inquiry, and if you have a particular scenario where you believe there might be something deleted, we can discuss it, and we can ascertain whether there may be a chance of recovery. I stress the term may. There's never any guarantee that deleted data can be recovered. So that's it from me. I'm going to hand you back over to Karen, where we're going to wrap up, and we'll invite any questions. Thank you very much.
Thanks so much for listening. If anyone's got any questions, please feel free to send them in now. We've got a few minutes and we'll try to answer those. Also, feel free to contact us and we can answer anything in future for you. One of the other things I was just going to mention, when people do instruct us, obviously it's different for each different service that we provide. However, I've found for some of the forensic accounting side and the digital forensics to try to narrow your scope for the instructions as much as possible. And we often do a phased fee approach, because we find that works better, where we have a look and analyse what's actually there for you, what you're going to be able to get out of it, and how much it's going to help. That just means that you're not going in with a huge fee right off and people freak out. We can actually do as little or as much as they actually need us to do, and do it just in a phased approach that they're comfortable with. We always usually get us to, get you to engage us through yourselves, even though your clients might actually be liable for the invoices, but we get ourselves engaged through you so that you've still got legal professional privilege for whatever we find for you. So let's just see if we've got any questions. I don't think we do we? None there. So thanks so much for listening and spending your afternoon hearing all about forensics and family law. We'll send a copy of the slides and also the presentation to you tomorrow. If you've got any queries whatsoever, please don't hesitate to contact us. And thanks so much for listening.